Health insurance can already be extremely confusing if you work for a employer, but it can be even more confusing when you are self-employed. So in this video, I'm going to walk you through everything you need to know about how you can deduct healthcare, what type of healthcare benefits can you have for you and your family, and my biggest and most important one that I want you to really watch is the triple benefits of a health savings account. My name is Anna. I am the owner of The Tax Boss, and we help clients all over the country play the IRS game just like wealthy people do. If you are running a business, you are now able to deduct your health insurance for yourself and for your kids on your taxes. I'm going to tell you the two different ways that you can do this. But that's number one. Medical insurance can be deducted, but it depends on how you are taxed. Either you are an S Corp or an LLC. Now, if you don't know the difference between these two, there's a video right here that I recorded that goes into detail of when you should become an S Corp and what the biggest difference are. So go ahead and watch that if you don't know the differences. Now, if you are an S Corp, you can actually deduct medical insurance expenses for you and your family from your S Corp return as long as it is paid out of the S Corp. Here's one thing that a lot of people miss though. You are supposed to add that expense to your W-2. This gets missed all the time. So what should you do? Contact your payroll provider and say, hey, this is how much money I've paid in health insurance. Can you add it to my W-2? And they should know what to do. If you are taxed as a single member LLC on Schedule C, you can still deduct your health insurance, but it will be on page 1 of your 1040, which is your personal return, Schedule 1. There will be an adjustment for how much you have paid for health insurance out of the business in there. Now, let's talk about the different types of benefits that you can get in the medical world as an entrepreneur. Let's start with flexible spending accounts, FSAs. They're my least favorite because it's a use it or lose it. So you can put up to, or your employer, $3,300 every single year. But if you do not use that, you lose it. So really, it's not that much. But if it's there, if your employer gives it to you, if you're in a partnership or an S Corp and it's a benefit, use it, right? Because you can still find ways, but if you don't use it, you lose it. Now, let's get into the most fun strategy that I like that a lot of people don't know about and don't utilize as business owners. They're called health savings account. I'm going to give you a list of reasons of why you should be actually investing and putting your money into health savings account. So let's get into it. Number one, regardless of how much money you make, you can contribute to it. This year, for single, it's $4,300, and for family, it's $8,550. That is a write-off against your income right away, no matter how much money you make. Number two, if you don't use it, you do not lose it. So that means if this year you put in $3,800 and you had no medical expenses, that's amazing. Next year, you might have some. You can still contribute again next year and still use what you had in there from previous years. You can actually establish this anywhere. You can literally go online and Google establish an HSA. It is really easy to establish. You don't have to do all this paperwork. You establish it and you fund it. That's as easy as it is to make sure that you fund and establish your HSA. Now, let's say that you had one with your employer and now you're an entrepreneur. You can take the money from wherever they had it and move it to your account, which is the HSA, so that you have more money in there for medical expenses. Here are some cool tax benefits that you may not know about. It comes out tax-free for medical expenses, right? So that means that you can put in every single year the maximum, which this year, let's say it's $3,800 for single people, and you might not have any expenses, and you might have it there for 10 years, and in 10 years, you might have a huge surgery. You can literally use the money that you've been saving to reimburse yourself for whatever expenses you've had it, and it comes out tax-free. Now, another cool thing that you can do is just because you don't have your HSA little credit card when you show up to the dentist, it does not mean that you're no longer allowed to use the money in the HSA account. What it means is that, okay, sure, I'll pay out of my credit card and I'm going to go back, submit my receipts, and then get reimbursed personally. So I'm not losing out on that benefit of an HSA. One of the cool tax benefits that you did not know about is that you can actually self-direct your HSA. So here's the cool thing about that. Your HSA can invest in crypto if you wanted to. If you have no idea what self-directed drafting your IRA/HSA, I created a video right here that you can go ahead and watch. But essentially, the money in your HSA, you have control over it, so you can be the one who invests in whatever you want. There are some limits, so you should look into that. But you can invest in that. So when you take that money out, and if you want it tax-free for medical expenses, it does come out tax-free. So let's say, for example, you invest every year $3,800. After 5 years, you've already invested in crypto, it's going up and down. And in 5 years, again, you have a huge medical expense. You can take that money that you have made grow tax-free as long as it's for medical expenses. Another cool thing about the HSA is that if you have kids, you don't need earned income to open one for your children. With Roth IRAs, you do need earned income, but with HSAs, you can open one for your kid, invest the money in there, and use that again for medical expenses. Every year, you have until the 15th of that tax year to fund your HSA. So for example, right now we're in 2025. That means that you have until April 15th to fund your HSA, and it counts as an expense for the year of 2024. I hope that this video gave you a little more insight on how you can maximize your benefits and your write-offs from medical insurance as well as HSAs. And if you like it, make sure that you like and subscribe to my channel so that we can continue to provide you with amazing videos on how to play the IRS game just like wealthy people do.